Well, recovery taking place in the Indian markets and recovery taking place in HUL as well. Remember, that stock was down about 2.25% in trade, but now it has recovered most of its losses. This comes in the back of the backdrop that the penalty imposed by the Anti-Profiteering Authority after it held the company guilty of making undue profits. Manglam Maluk tells us the details. Manglam, tell us, this was supposed to be sentimental negative, but do you think it will have a long-term impact?
Well, HUL is among the biggest losers on the Nifty today, and that's primarily because on Monday's trading session, rather post the trading session, we got in the news coming in from the National Anti-Profiteering Agency that HUL perhaps has profiteered under the GST regime to the tune of 535 crores, on the back of which they have been fined about 500 crore rupees. Now, on its part, Hindustan Unilever says that they have suo moto paid about 160 crores to the National Consumer Welfare Fund, and add to that, they have passed on the benefits under the GST regime, not only via price cuts, but also via increase in grammages. So they are reviewing all the options right now, whether this is a one-off or whether this is something which is sustainable in future in terms of an overhang, is something that the street is worried about, and which is why we're seeing a decline on the stock, along with the overall weakness that we're seeing in the markets.
All right, the stock has recovered a fair bit, but still is in the negative zone. But take a look at Colgate. In fact, fair amount of volatility in that particular counter in the last few minutes of trade. It went down, cracked to the lowest point, and then is trying to recover. So keep that on your radar. Another stock which is buzzing in trade today is Brigade Enterprises, after Motilal Oswal initiates a coverage with a buy call. And Sonal Bothra is right here to give us a quick roundup of what it means for the company, which is up in trade 5%. Sonal.
Well, that is one stock that is doing really well in a weak market, and that is because Motilal Oswal is betting big on the stock. They have initiated a coverage on the stock with a target price of 282 rupees per share, and they think the company will do better going ahead because there's a tactical shift in the segment that they'll be getting into. So basically, right now they're into leasing, residential and hospitality business, and gradually they are moving more towards the leasing business. They also expect that the company will be adding close to 4 million square feet of leasable area in next 5 years, and will be able to sell around 7.8 million square feet of properties amounting to around 4,100 crore rupees in next 2 years. Apart from that, they also expect the leasing income to grow by around 2.5 times by FY22, and expect the EBITDA overall to increase to around 107 crores. Currently, in FY18, they've been able to do EBITDA of around 59 crores, so they expect it to almost double by FY21. They are also expecting the company to sell a cumulative 7.8 million square feet of properties by around FY21 for 4,100 crore rupees. So overall, very positive on the company. Expect an upside of around 30% from current levels. Back to you.
Okay, thank you, Sonal, for that. The stock up around 5%. But shifting focus to the auto sector now, we spoke to Rajiv Bajaj, the MD of Bajaj Auto, who says that even though Q4 will be muted for industry, double-digit growth should continue into FY20. In an exclusive conversation with cnbc TV18, he also said that the company is planning to enter the electric vehicle category by 2020. Take a look.
We will come in with electric vehicles for personal use at the top of the pyramid, because all new technology does well when it comes in at the top, because those consumers appreciate it and can afford it, and you don't have to bleed to introduce it. Now, whether it will be a scooter or a motorcycle, as I've said before, time will tell, but definitely before 2020, both in the personal space in the form of a scooter or a motorcycle, and in the commercial space in our three-wheeler and quadricycle, we intend to be there with electric vehicles.
Now, through the end of 2018, we are recapping the year gone by through the sectors that impact the market as well as the economy. Now, Nifty IT has been one of the best performing indices this year with an outperformance over 20%. Here is our colleague Rima Tendulkar with a look back at the IT sector. Rima, take it away with the Tech Talk.
Yes, a 20% outperformance by the sector, one of the best performing sectors this year. And the key reason for that, the sector was boosted by the Trump tax reform, which drove US growth and spend. INR-related depreciation, the rupee weakened by 10% from the opening levels to the lows, and also regular capital return to the investors. But where 2018 differed from expectations at the start of the year. At the start of the year, the hope was that all the companies will show a meaningful improvement in growth rates. However, contrary to expectations, there was not a broad-based pickup in growth. Growth was actually only led by TCS, and companies like Cognizant actually witnessed a slowdown in growth rate, which is what explains the stock returns this year. As you can see, it was TCS which was the best performing stock this year with a rally of more than about 40%, given that this company is likely to see the maximum expected improvement in growth rates. For Infy, it was about a 26% return, while for Wipro, it was a fairly pedestrian year. So this is how the revenues of the companies could stack up by the end of the year. For TCS, the maximum improvement from a growth rate of 6.7% in FY18, the company is likely to see a double-digit growth, while for Infy, the improvement could only be to the tune of 1%, and for HCL Technology, the organic growth could actually slow down on a year-on-year basis. For HCL Technology, there was another problem. The strategic tilt towards products and platforms has not gone down very well with the analysts. The two trends which are mixed so far and on which we need clarity, one, of course, is deal wins, and the other one is BFSI. So deal wins at record levels for Infy as well as Tech Mahindra. But on the other hand, Accenture, when they came out with the numbers, said that the new bookings growth was the slowest that we've seen in the last 7 quarters. On to BFSI then. Very strong for TCS, Infy as Wipro in the quarter gone by. But for Accenture and Cognizant, it was on the weaker side. Some positives which have played out. We've seen an across-the-board improvement in hiring as demand has picked up and utilization levels are hovering near 3-year peaks. In fact, the Naukri IT Jobs Peak Index has seen about an 8% growth in November, and the average in the last couple of months has been close to about 17%. Digital also now is a meaningful contributor to the company's overall revenues, roughly about 30% of the overall piece. Now, some key questions for FY19. Will demand accelerate or even remain steady? While deal momentum has remained strong, the macros are a lot more volatile, whether it's trade concerns or Brexit. Accenture has actually warned of client budget growth moderating in 2019. Also, the question is whether companies can fulfill the demand without impacting their margins too much in the light of talent shortage in the US and constrained H-1B availability. And the rupee has already appreciated. Now, as JP Morgan puts it, 2019 revenue trends imply improved growth rates, which could prove optimistic if the macro risks materialize. But if major risks such as Brexit, trade war prove to be benign, IT services could outperform as companies have gone through the pain of investing to win against the secular themes. Back to you.
Thank you, Reema, for that. So, year of the IT, but today that index is down about 1%, perhaps on rupee appreciation. But with that, time for a short break on the show. Up next, we bring you the story of one of the most controversial defense deals in India. Stay tuned for that one.